We're here on the Euro Aussie 5 range, and as you can see, we're actually in trend on the Euro Aussie, and a lot of it was thanks to the news day that we've had today. The time now is nearly 5 o'clock. All the news is finished for the day. However, the trend has appeared here on the Euro Aussie, and it's hopefully going to allow me to get an entry. And if we can pull back into this highlighted area, so here we have the new structure high and the outside return. As we pull down into this area, I would like to see a retracement down to here, and maybe have some RSI hidden divergence at a higher high, higher close, and I can actually play for an extension up here to that 127, which is this box. And if we look left, this is the most recent structure level. Now what I'm just going to do actually is just delete everything off and actually go out to the higher time frame and do the higher time frame analysis here on this particular currency pair. Now looks like we have an AB equals CD pattern here, but we do not. It falls very, very short, and also we have just violated the highs up here. And if we look further left, you can see that we actually came up to this zone. So right now, the higher time frame, I actually have no bias on it, because we've just broken major resistance here, and then we've pulled back down into it, and we've pulled back down into the 16200 flat. So in that time zone, the dailies, I have no real bias on the market, but as we drop down the time frames, that changes a little bit. So I was actually looking at shorting the market up here, never got an entry, but if we move this structure level to down here and just draw out what the market did: new structure high, outside return, new structure high, outside return, that didn't work, new structure high, and we have pulled back into our outside return. Now this could be a couple of things. First of all, have to bear in mind this could be a head and shoulders. We are in the wicks on the dailies, although there is still hundreds of pips to potentially go higher, if you understand me. So that's a concern. But what we do have here is that we came down, we put in an indecision candle. The close of the candle was literally in the center, and we've got the equal measured wicks either side, and right now we're pushing up higher. We've got 5 minutes to go. Depending how this candle closes, it looks as though we're going to get a higher close, because we're just so high here. It would be an awful lot to pull back within 5 minutes, but you never know. So at the moment we've come down into the outside return, we've put in an indecision candle, and then we've put in actual fact, sorry, that was the 240 here on the hourly. You can see that we've put in a perfect pin bar and then a higher close. So what we've done on this time frame is you can actually see the trend here: new structure low, outside return, new structure low, outside return, new structure low. Now we've violated. Okay, so on the 240 it's looking like we're going higher. On the 60-minute time frame we've put in a violation, so there's no trend, but based on the candlestick formations, which is this pin bar and the rejection on the 4 hourly and the massive higher close that we're getting here, my bias currently is long. Okay, the market hasn't confirmed it's going long, but that is my bias. So if I drop down to the range bar charts, which is able to show the ebbs and flows, what we can see is that we've actually been moving very, very harmonically here. So this is a initial structure high. It's an initial structure high because we violated the outside return. This is a new structure high, putting us in trend. We saw a retracement back into structure, a very, very shallow retracement, indicating that we could see the trend continue, and now we've put in a new structure high. So if I just go back to the 60-minute time frame, the question is if we see a pullback into the outside return, is there still room to go to potentially get a retest and an extension? Well, just put in a structure line anywhere you want, and what I do is I just move it down so I can see there's a structure level here, a very nice one, and I can see, in fact I'm going to leave that there, and I can see that we've tested. If I just move it to there, there, and here as well, a level that has been tested now 5-6 times. So if we are going higher, we could potentially see a move up to that level. If you want to be a little bit more conservative, we can say that we have a level here, and this would be the bottoms here. So let's just go back to the 5 range just for a moment, because this is where the action is happening, and I'm just going to move the charts down a little bit so that we can see those projected targets. And what we want to do is just put on some fibs. First of all, we're looking at the market coming down into our outside return, and I'll be looking for an entry reason to get long. So if we put an extension on from the swing high to the swing low, we can see that we have a minor level coming in at that first structure level, the 1414. But what I like to look at is the extension of the leg here. Now look at that. That 127 comes in right at that structure level. Now that's going to be more powerful to me than a 1414. I look at that as a minor fib, and I only really take it into consideration when we have a 1618 extension up there. And so if we also look at our bigger leg down here, we do have that minor fib, the one we've just mentioned, the 1414. It all adds to the confluence of that area, though it is only a minor fib. And there's no inversion here. So what else did we have? Okay, what do we have from our swing high to our swing low? Do we have a 618? Wow, look at that. Absolutely beautiful. A 618 right on the dime of the 127, the 1414. So we have an area, a very nice area, which lines up with structure, fibs, and we have a trending market here on the 5 range. Now what that means for me, this is quite important, is that I will not be looking for a retest here. I'm going to be looking for the full extension. So you can see now the RSI is at 30. Here's something that's quite important. If we keep pushing down, the previous outside return, which is this one, the RSI went oversold at 32. Now currently we're at 29, did I say? And so if we do push down a little further, it's looking like we're going to have hidden divergence. Now in a strong trending market like this, hidden divergence is quite a strong signal. It's a signal of trend continuation. And so if we can pull down to something like this zone here, then I'll have my stops and ATR below the low, which is going to be 5 pips. Well, I'm actually going to be a bit lower than that. I'm going to be 5 pips underneath that even handled number, the 16200. And what I'll be looking for is, if we come into this zone here, I'll be looking for a higher high, higher close. It would be nice to see the RSI go oversold and have that hidden divergence as well. And then in terms of what targets will be, I'm looking at going past that structure level, and I'm going to want to front run this by a couple of pips. So I'm going to want to be here at 69. So that gets me underneath the 618 fib, the 127, the 1414, and underneath that structure level as well. So this could be a very nice trading opportunity. So I'm going to go ahead and colour this one in green. I do like them to be lined up. And now we're not going to know our exact risk to reward until the market comes down. It gives us a higher high, higher close. So at the moment this is a 2-to-1, but the deeper we pull down, the better the risk to reward on this particular trade. So because this is the range bar charts, it's something I have to monitor and manage, because these things can happen quite quickly. But we'll come back and see if we can get filled on this trade. And we're back. We're pushing past our expected entry zone right now, and we have just touched the oversold. We're down to 19.6, and so every pip that we push down here is very important, because what happens to your risk to reward is all of a sudden your risk, which may be 30 and your reward might be 50, all of a sudden your risk drops to 29 and your reward goes to 51. And it really makes a difference. It's only 1 pip, but it actually makes a difference of 2 pips. And so I'll just be monitoring now to see if we can get a higher high, higher close, and that will be my entry. Okay, and we're back, and you can now see that we've got a higher high, higher close. I didn't quite get the entry I wanted, but nevertheless we still have a very positive risk to reward here. So if I just move up the targets now, and remember we were trending quite heavily here, so I didn't expect as much of a pullback as it was, but this is how it now looks. Now here's something that I didn't mention earlier, and that is that I've actually got my stop further back than an ATR, and there's a very good reason for that. And that reason is, just let me get rid of this kill zone box, and that reason is, if we look down here, we have a psychological number where the structure level came in, with just a bit below it the 162,000 flat. So rather than being 5 pips underneath it, which would have put me here at 162.02, I've actually gone an extra 7 pips below to get me 5 pips underneath that even handled number. So just to confirm that we're now in trend, we've got room to go to play for extended targets, and I put my stop in a position which is safer than just going an ATR below the low. So we have a lot of confluence up here for the extension. I believe we can get a little bit more out of it, but I prefer to be out the market sooner rather than later, knowing I've got a positive risk to reward. So we'll come back to this trade now and see whether or not we can pull these 43 pips out of the market. And we're back. A little update on this trade. We have now made a new structure high, and I don't just go off the 5 range, I also have had a look at the 15-minute time frame just to make sure that we haven't spiked up there. And you can see now that we have actually closed above, made a new structure high here by 2 15-minute candles. So what I've just done now, we haven't had any kind of retracement at the moment, so I am expecting one, but what I've done is I've moved my stop now an ATR below the low, because this has now officially become the new outside return, because this is now a new structure high. So my stop is now an ATR below this low plus 2 pips, actually plus 3 pips below the low here. So the amount of risk on this trade has now been reduced to 18 pips. So we now have 18 pips of risk for a potential 43 pips of reward, and I'm hoping we're not going to get any type of retracement, although I do expect one. We'll come back and see if we can film the outcome of this trade. If not, it's getting quite late now. It'll have to be a trade that I leave overnight and review it first thing in the morning. And we're back, traders, and the time is 5 to 6. I'm on my first cup of coffee, and I've woken up to the trade winning for plus 43 pips. A very, very nice winning trade, a fine example of how the range bar charts can provide more opportunity than structure trading, as it provides that different view on the market. And if we just go out and have a look at the 15-minute time frame, and I do want to just look at the 60 as well, I'm just going to remove these VS1 levels. You can see that we've come up, we tested that range, and we got a rejection from it coming into that structure level. Let's just have a look what the 60-minute looked like. And we did actually go overbought as well, and so you can see we're starting to see that pullback now. So a lovely place to take profits and a very nice trade. Do me a favor, if you do like the trade and the way I do these videos, give me a like, give me a share, comment in the box if you've got any questions, or if there's something that you disagree with on the trading, let me know. I'll be happy to hear your thoughts.